All right. Thanks so much for being here, guys. Really appreciate it. My name is Jeremy Berrington. I'm the CEO of Scribe. We are crypto's creative and communications agency, working with a lot of folks in the blockchain space, a lot of people here at DAS. Have some colleagues in the audience. Shout out to Elena and Madison. And really excited to sit down here with Solomon Tesfaye, Chief Business Officer at Aptos. It's been really fun getting to know you and prepping for this over the last couple days, and learning a lot more about Aptos than I did 48 hours ago. So thanks for doing this.
My pleasure.
Yeah, so you really have a really interesting career, and you sort of represent like a 50-50 split, TradFi versus crypto. So just give us an overview and your origin story, if you will.
Perfect. And pleasure to be here. Solomon Tesfaye, I'm the Chief Business Officer at Aptos. I've been with Aptos for about 2 years. I joined as head of capital markets, and then as we focused more and more on financial services applications, I transitioned into this role. I've been in the space since 2018. Before it was called RWAs, I've seen a lot of acronyms over the years: DSOs, STOs, ICOs. So that's kind of dates me in terms of this space. I was at T0 prior to this, so I was head of capital markets there. It was one of the first entrance into the RWA space. Think of comparable to Securitize, which is another good partner of ours. They were very vertically integrated, had multiple different broker-dealers. They tokenized primarily equity, so I had the experience of doing a lot of those kind of first deals within that particular space. Exodus tokenization of their Reg A plus private placement, St. Regis Aspen Resort when they first tokenized their equity, and my background before that is primarily investment banking at Citigroup, as well as venture capital and some ops and entrepreneurship. So great to be here.
Awesome. I actually, we might have crossed paths at some point because I worked on Exodus's Reg A as well, and I remember it just being like such an insane moment for the space that was like really, I think, ahead of its time in a lot of ways. So that's cool.
Absolutely. I actually met with Exodus this morning. Just for context, Exodus is a crypto wallet. They actually tokenized their equity. They did what's called a Reg A plus private placement. They were the first to raise 75 million from their user base. So they accepted Bitcoin, Ethereum, and of course USD for their capital raise, fully oversubscribed. And then from there, they began trading at the time on an alternative trading system. The tokenization was done by Securitize. The trading was done by T0. And then now they've uplisted to the New York Stock Exchange. So it was a great kind of life cycle of a particular deal, and they were very innovative in that way.
Yeah, so tell us a bit about Aptos. I think most people in the broader sort of crypto world, crypto community, know Aptos as a layer one, and you certainly have that, but we're here at DAS, institutions meeting crypto. So just unpack Aptos's business a little bit more holistically.
Absolutely. So for those who are less familiar with Aptos, the underlying technology was actually incubated within Meta. So it's a move-based layer one. Of course, once Meta was not able to pursue it for a number of different reasons, the original team, including the blockchain lead Avery, left with about 26 or so engineers, and then they started Aptos. And so at this point, it's the most performant blockchain, so the fastest, lowest cost blockchain in the market. So when you think of stablecoin, that's of course one of the most obvious high volume applications of the technology. USDC, USDT, USD, PYUSD, USD1, the fastest, lowest cost version of those particular products are on Aptos. And so, and just to zoom out a little bit more, at first we were focused on just the layer one in the most pure sense, where we're encouraging builders to basically build projects. So we have hundreds of builders around the world building everything from applications within microfinancing, remittance, and so forth, to RWA applications. But then now we actually incubated some businesses because we realized we have a very strong engineering team. So we've actually launched 3 weeks ago Decibel Dex. So it's the most performant Dex in the market. I launched 3 weeks ago, but we've reached over 1 billion in volume already, so we're very excited about the prospects of that particular initiative. We're focusing heavily on trading because we think that's the most obvious practical application of blockchain. And we also have what's called Shelby, which is, you could view it as basically decentralized storage on chain. So decentralized AWS or Google Cloud. And so as you think through, all right, AI agents and so forth are going to require a lot of data. We wanted to actually introduce a product that we thought was extremely competitive. We did this as a co-build with Jump Crypto, which is one of the, of course, the most active traders within the crypto space.
Shout out to my hometown of Chicago, the home of Jump Crypto, Chi-town. Yeah, so I think like you said, there's a ton of acronyms. The term RWA gets thrown out a lot. If you can just get us a little bit more specifically into RWAs and specifically what the life cycle of an RWA looks like.
So when I think of the life cycle of RWA, and I always joke around the RWA because I don't know what's not a real asset, but when you think of RWAs, you think of just first origination, which is primarily off-chain. That's more like the structuring that's done by whether it's an asset manager, a fintech company, basically an issuer. And that structuring matters if you're thinking downstream, if you actually want this asset to trade. That's a crucial step. Then there's actually the tokenization piece, which can be done by a number of different parties. At this point, tokenization in itself is somewhat even commoditized. A lot of different parties offer it as a means to actually provide kind of the real value add. And then that's where you have like the programmable ownership. That's where you have the embedded compliance. And then you have distribution. And that's been picking up over time, but still mostly around primary distribution as opposed to secondary distribution. That's where you have 24/7 trading, fractionalization, real-time delivery into wallets. And then you have lifecycle management where you think of like corporate actions, redemptions, coupons and so forth. And that's kind of how I think through those. And most of the action has been primarily on the primary side. We think of like Blackrock's, Biddle, Franklin Templeton's money market fund, Benji, and it's been very specific product types. But I'm very, very excited for the liquidity piece of it to grow.
Yeah, and so you had mentioned BlackRock, Biddle, Franklin Templeton, Benji, and your collaborations with some really heavy hitters in the institutional space. What are those companies really evaluating you on? You know, what is important to them?
Absolutely. So BlackRock and their money market fund Biddle, as well as Franklin Templeton and their money market fund Benji, both of which are investors in Aptos, are both those products are supported on Aptos at this point in time. What institutions are primarily looking for is performance. They're looking for security. They're looking for, can we meet our compliance obligations if it's a regulated institution? And then also they're looking for upgradability without disruption. So it plays well to just Aptos' strengths and also plays well to the security of the underlying language Aptos move as well.
And so I think the stat is something like the RWA market has 4x'd in the last year. It's 26 billion, I want to say, which is great. Everyone's happy about that. But when you contextualize that within the broader world of finance, there's kind of a liquidity lag in a sense relative to other parts of the financial industry. So just unpack that a little bit and how you feel about that 4x and that 26 billion within the broader context of what's possible here.
Yes, definitely 26 billion is a rounding error when you think of like traditional finance, but the momentum is obvious in terms of the 4 times the value. And I've been fortunate to see that kind of momentum grow over the years I've been in the space. We have about 1.2 billion of RWAs on Aptos, primarily money market funds, private credit, and a few more esoteric assets. Really, the gap between primary and secondary is due to a number of different reasons. One, just the practical element. A lot of these different assets are private placements. And so just from a regulatory perspective, there is just restrictions around when, like a Reg D 506C for the lawyers in the audience, when it can actually trade under like Rule 144 a year later. So there's already going to just be a natural lag. Some of these assets are just buy and hold assets. When you think of like a money market fund, you could obviously hold on to that. You don't typically move in and out very quickly. If you think of like private credit, you're definitely not moving in and out quickly. Or think of real estate, the same thing. It's not like someone's day trading real estate unless it's like a publicly traded REIT potentially. So in general, there's that piece. And then also there's a market structure element. There's not a lot of like RWA market makers, right? Liquidity is fragmented. So there's a number of things that are causing this lag. I'm very excited for now that we're seeing public equity start to come on chain. ETFs come on chain, things that inherently have a lot of liquidity come on chain. I think that's where you're going to see that gap start to be bridged, as opposed to trying to create liquidity, which is a very hard task, and it's eventually going to get there, but it's not immediate after effect.
And how do you think that 4x is going to look when we project a year ahead? This is not financial advice, okay? But what do you think? You think the pace is sustainable? You think 4x might just be dipping a toe in the water?
Oh, I think it's inevitable. Definitely not investment advice, but just by the momentum, it's because it's so small relative to the broader market. And then at this point, every financial institution has a blockchain strategy. And so I definitely think that's going to be more of like a hockey stick in terms of the growth.
And then just to close, talking about the things that you're really, bullish, excited about. We talked about the confluence of RWAs and stable coins, trading, et cetera. And I thought that was really interesting. If you just want to give a little perspective on why that's so exciting to you.
So right now, I think we're at a unique spot. How we look at stablecoins, RWAs, trading is, stablecoins is basically the settlement layer, if you will. RWAs are diversification and yield, and then trading is price discovery. And so that's kind of how we look at the stack. And so we're basically, at this point, actively playing in each of the different areas. On the stablecoin side, last 30 days, we had about 60 billion of stablecoins. On Aptos, RWAs, I mentioned, we have 1.2 billion. And then now with Decibel launching 3 weeks ago, now we've surpassed $1 billion in volume in 3 weeks. So, and at this point, we're launching 5 new assets every week on that particular platform. So I think we're at this point where you're starting to see that convergence, if you will, and really a true financial system on chain.
It's awesome. It's so exciting to sort of be here at this particular point in time and to know that we're just dipping our toes in the water and excited for what's to come. So, guys, please give Solomon a hand. Thank you guys for, being here. Hope everyone had a great DAS. Thank you to the team at Blockworks for putting this on, and another really good year here in NYC. Thank you, guys.
Thank you.